Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday, it's June 1st, 2012, and as we do every Friday, we'll be going over the 18 major global markets that we track at PerfectStockAlert.com so that you guys know everything that I know moving into the week ahead. Right now, the main thing is to be looking for short opportunities, of course. You guys know that from watching any of the videos I've done for the past few weeks here. So what we're looking at now, we're starting off with the Australian market, the AORD. Right on this one particular, I would actually be willing to take a short now, though you may get a major gap down because of what's happened obviously in the US today. We've already seen the major market drop there. So these guys could actually gap down substantially and basically miss the opportunity. But as long as you're within this range right here, I'd be shorting that. And basically logic there is that this support line right here, what we've been talking about on many different charts, is what's breaking down. So as long as you're looking at a chart that's still in this particular range, and we're anticipating a breakdown of that, to short in this range with the stop off the high there, expecting her to break lower, makes sense to me. That's how I would trade that. Couple other key points here about the Australian markets, like we've seen in many other charts we've talked about. We didn't update this one, or we didn't mark this one to show it, but it's there as well. You've got this high point here, and by the close, or the highest close that you had here, and then you can look at any of these other closes. You can see they're all lower than the one before it. But let's look at this one here. You can see that you're trending down here. Get the corresponding time period on the ultimate oscillator, and it gets a high point here and a higher high here, which show an uptrend. And that is a bearish situation. It's a bearish divergence of one of the two different types. This is a bearish setup. Tells you basically that this move to the upside is unsustainable, will be erased, and that means that this is going to break down. We talked about that yesterday as well. So this is something you could short. It makes sense to me. Also, you've pulled up here to the about right now you're at 65.18 on the ultimate oscillator. Once you hit the 70 line, this little light dark line right here, once you hit that, that's where you typically get your peaks at. It's the overbought territory. So the fact that we're up there flirting with that level now makes sense to be shorting here. Looking now at the Dow Jones Industrial Average, we've covered all the U.S. markets, the Dow Jones, the Nasdaq, the Russell 2000, the S&P 500 in detail yesterday in our video analysis, showing both the long-term charts as well as the short-term charts, and told you this market was going to break to the downside. We've already been short, in fact, and we've actually advanced our stop-loss limits here. We went short. We got now advanced the stop to the high of today, even though that's a generous stop. There's no risk on the table for us now. Even if you were to reverse immediately, that's the main thing, is eliminate any risk. There should be no chance of you being stopped out, even with a small loss. Right now, you've got plenty of momentum to the downside, and I would stay with this trade on the short side. Main thing that I want to point out added today, again, I recommend you watch yesterday's video where we covered these in detail, but the one added detail that I would throw in there now is that we're now closing below the 200-day moving average on the Dow Jones Industrial Average. That is indicative of a major bear market beginning. That's the first sign that you don't ever want to see if you're a bull, is you get a close below the 200-day moving average. You now have that, so you shouldn't, of course, be a bull, but if you are a bear, that's what you want to see, so we like that. Looking now at the French CAC 40 index, we went short on this one a few days back when we broke this little support line. Actually, when we closed below that, we told you that was our signal to get short. We took that opportunity the following day. You saw a little intraday activity test that previous support, and you see it's acting as resistance, and we just fall down. Another day to the downside, and I'll take this stop loss limit. It's up here, and I will advance it to the high of that day. When that day happens, I'll update the chart and put it on the website. Also, next week, I'll be covering all the other charts out there that we track, but they're longer term pictures, so I'll be showing you some other things out there. There's major information, longer term charts that you guys just need to be aware of right now. I don't have time to do it in this video, but I will do it next week, going over each individual chart. Like I said, I've already covered the US long term on yesterday's video, so check that video out. Looking now at Italy's market, the Milan, the MIB, you can see that we have actually gone short. We gave a signal 3 days ago. We saw this move here as being a shooting star formation, even though it's on the bottom of the pattern here. You had this little sell-off, then it bounced off that level, and you sold down again, bounced up again, and you sold down to it again. So some would look at that as a buy signal, but we thought, no, that's not accurate. What we actually are seeing here is a signal that we're going to be breaking this support line, which is, of course, what we did, and you can see that today closing below that. I would stay with that trade, not advancing the stop just yet, but if we get another couple days to the downside, or even a good day to the downside, I would then advance my stop on that position as well. The German DAX Composite, this one we went to go short on back during this time period, got stopped out as we started bouncing around sideways. We told you we expected this to break down anyway, but I didn't actually go short again at any particular time because we didn't actually get a clearly defined close below that support line, which would give me entry opportunity. Now you have it. You could actually start shorting here. I'm not going to do that here. I'm shorting many other different ways and different positions, so I'm not going to do that. Also, you can see that we're now down at the 32.62 level. I don't like to short once we get down here under the 30 line. Yes, they can sustain under the 30 line on the Ultimate Oscillator and just continue to slide, but I prefer to get a bounce and then take advantage of it rather than chase a market lower. And then, like I said, in this situation, I've got several other positions already open, already making money on the sell-off in Europe, so I have no reason to take any risk here and jump on this one. Though I do see it makes a lot of sense to be short here. If you are short, your stop was up here. That's where the logical stop would be at this point. I would take it and advance it down to today's high. Once it's above that, you have no risk on the table, and then you just continue to advance that stop as you continue to move lower. Looking at the price of gold, you can see that you do have a reversal situation here. You've got this sell-off here to a low point. You bounced up here, still lower high than you'd seen before here or here anywhere. You sold off again, and then you come up here and made a series of higher highs. Now you have a series of higher highs and higher lows, and this tells you that the reversal has happened. You have seen this move to the downside. Now you've seen a reversal to an uptrend here. That makes sense. I would work with that. I wouldn't buy it here and now. A couple different reasons. Number one, it's not being confirmed by silver. That's one of the rules I tell you guys all the time, is always get confirmation from other charts. Silver's not confirming the gold move here. I still believe and understand why they're moving here. We talked about this, I think it was last Friday. Told you that you could see a move here higher in gold as people anticipate more printing of money that tries to solve the problem or prolong the inevitable over there in Europe with Spain's issues and so forth and so on. So I can see why gold's going higher, and if you traded that, awesome for you. Advance your stop along the way. Right now, like I said, she's at 66.78, so I'm going to let her run without me. But the next pullback that I get, if you were to get another move higher here, and then she starts to pull back and gives me a nice hammer candlestick formation, yada yada, I would then take that as a long opportunity to trade it to the upside. But right now, I'm not going to jump on it at this point. We are stopped out of the short position. We went short back in this time period. We went to stop up here. I never advanced that stop. Somebody may have traded that and took some profit intraday here or here. If you did, good for you. If not, you've been stopped out. You should not be shorting this at this time because you are trying to reverse here. Doesn't mean that she can't break back down to the downside or anything of that nature, but right now the chart is telling you she has enough strength to reverse this downtrend back to an uptrend, so that's not where you want to be shorting, of course. You want to be looking for long opportunities in that situation. But again, I will wait for a pullback and a proper setup with a hammer candlestick formation, etc., etc. Looking now at the Hong Kong Hang Seng Index, we are already short this position, but we do mark the chart showing that you could have another opportunity to go short again if the following trading session gives you a lower low than this point, and then at that point you could start shorting again with stop off of today's high, 1 cent above that. So just be another entry opportunity there. Like I said, we're already short. I haven't advanced the stop yet. You can see the stop's way up here. Someone could advance the stops at this point now, but I'll probably just wait for another day when she continues to move lower. Basically, this is the little support line that we were watching there. She jumped below it a couple days ago, then bought up above it. So intraday she fell below it. Today she's closed basically on that line. Not a lot there that I can do with that, but I would look for confirmation, continuation move lower. At that point, I would advance my stop, and anybody who is looking to get short at that time, you could use that as an opportunity to do so. Remember, you're only at 51.55 there on the Ultimate Oscillator, so it's not too far overspent before you can start looking for a short opportunity. The BSE, or India Bombay Stock Exchange, talked about this one a few days ago, got short as well, saw the shooting star formation, also told you to look for basically a confirmation the next day. Of course, that's always our rule, and that's what we got the next day, so we took it as a short opportunity. And we told you, even though you were still in this little channel here, and we had not closed below it at that point, that we expected it to break down anyway for multiple reasons. Of course, you had this high point here, and the lower close there. You can trend down, corresponding time period in the Ultimate Oscillator here, and here is trending up. That's false. Tells you that this little rally here is unsustainable. You will break to the downside. Coming down here and breaking below that will be just that much more confirmation. And as I've already argued in yesterday's video, that's exactly what you should expect to see happen, and you should definitely watch yesterday's video to understand this concept right here. But I would still be shorting this guy even now. Looking now at the Japan iShares at EWJ, this one we've been short for about a couple weeks now. We're advancing the stop to the high 1 cent above today's high, and I see this is a good opportunity to do that. You're getting down to about 36.05. You still got plenty of room to move to the downside here, but whenever I get down close to the 30 line, I like to advance my stop, especially if the overall chart formation, we basically had a little attempt here to find some support. She broke through that, and now I want to start advancing my stop and locking in some gain. The FTSE, or the London Financial Times Index, this one, of course, will follow the U.S. markets lower as well, and you can see that we are still within this little range here. So I would still be willing to short here with the stop at this point. Because we're still within this range, and I'm going to keep my stop where it's at, but as soon as we get a nice close below that, moving lower, I would then take the stop loss limit and advance it. I'll be doing that sometime next week, I'm sure. Be looking for this to continue to move lower. Intraday activity, you've already seen a pierce going lower. Whenever you see a pierce of a trend line, that's typically a warning that you're about to break the trend line, which you should have known anyway. But in the event we are moving lower here, I would be taking short opportunities when I had them. Looking now at the NASDAQ, we covered this one also in detail in yesterday's market analysis, going over the long-term and short-term charts. I'm not going to add anything here and repeat myself, but the one thing that I will point out is we now have below a 200-day moving average, or close below the 200-day moving average here. This is indicative of a bear market is forming. So that's something to look at and say, you know, just because you've had this big move to the downside here, you've made a lot of money here, don't be looking at that and saying, well, we've gone so low, you know, the downside is over. According to this chart, it's just beginning. Looking now at the oil index, the XOI, you can see we have advanced our stop loss limit on this one down to 1 cent above today's high. The reason for that, of course, would be the 33 point of the ultimate oscillator. On this particular scenario, I am watching something. We're still a bit away from it, but there's something here that I am watching, and it's something you should also be watching, and that would be the potential development at a later point in time for a bullish divergence to form. Because you have this seriously low point right here, I'll be watching this level close and be watching the current ultimate oscillator. Excuse me. As we start moving lower here, if we don't go lower than this previous point here, we'll end up with a series of higher lows. And if that happens, now I'm going to be looking also at the close here and the close that we've seen here. We can see we're trending down. That would be calling for a bounce to the upside. So be watching this move lower here and be looking for a potential reversal opportunity. Like I said, it could develop and it may not. It's still really early in the game, so it's later during the way this is all played out that I will actually get involved on the long side if that happens. Right now, I'm not seeing that as something I want to jump on at this very moment, but I do want to advance my stop on the short position in case it starts to develop. Looking now at the US Dollar Index Bullish Fund, or the UUP, she's actually looking a little fatigued to me, but I would not take an opportunity to short that. I wouldn't take that risk there. I keep pointing out, whenever you have people selling stock, like we're seeing in the markets right now, what they're inevitably doing here in the U.S., when they sell stock, they inevitably buy dollars. That's what happens, and that puts a floor in the price of the dollar and drives it higher. I would not, of course, short this UUP right now because I wouldn't be a buyer of the markets, and so until those two things are agreeing with one another, I wouldn't do that. What I would do, however, anytime we get a nice pullback here, what we're seeing right now is a nice bottom, double bottom situation here. It'll shoot here and then move higher. You can continue to move higher here, but at some point you will get a pullback, a nice quality pullback. When you get that, I'll be looking for a hammer candlestick formation and an entry opportunity to go long, because I do not believe we've seen the actual high here. We also have this previous resistance line here is now acting as our support line, and so all this put together tells me be looking for a long opportunity, because we are in an uptrend, and that's what you want to do, is work with the trend. Looking now at the Russell 2000 Small Cap Index, this one I did not short, didn't get a really clear signal and opportunity to do that, so I just simply let it go. Like I said, I'm already short in several of the others, so it doesn't really matter if I missed one. The main thing here is if you are short, your stop should be 1 cent above today's high. I covered this one in detail, both short-term and long-term, in yesterday's market analysis video, so you can check that out if you'd like. Also be keeping an eye on this low point here and see what happens with the ultimate oscillator from that point moving forward. We could see another counter trend bounce, and it could be something we could take advantage of if it sets up right, but I want to wait and see if we actually get a nice clear setup. One other thing to add here, like we talked about before, closing below the 200-day moving average way back here was a telltale sign of what was going to happen. Now now you're seeing that develop, and you'll notice you've closed lower, further below the 200-day moving average here. So this is, again, all warning of a major move to the downside developing in the global markets. As long as that's the case and you're trending down, you want to look for short opportunities in this market. So keep your eye on that. Like I said, I covered this in great detail in yesterday's video, so check that out if you'd like. The SPX, the S&P 500 Large Cap Index, also covered in yesterday's video, which you should definitely check out. I would advance the stop, though. This one I am short in. I would advance the stop and note that you have now closed below the 200-day moving average. All the charts are indicating the exact same story. We got a lot further to fall. Yes, there will be counter trend bounces along the way, and some of them we will be able to play, but you want to work with the trend. The trend is clearly defined as being down, so be short or be wrong. Looking now at the silver chart, someone may be trading this from the long side. I won't do that because the trend has not been reversed, meaning that we still have a series of lower highs, lower highs, lower highs consistently. You don't have a change here of trend. You do have a series of higher lows, so somebody could be arguing, well, we're starting to see potential reversal here, but we've seen that in the past. Just because you get higher lows doesn't necessarily mean you should reverse. A lot of times that little support that you got there will actually end up breaking down. So if you are traded to the long side, keep a tight stop. Obviously, with gold breaking to the upside, I wouldn't take a short position here either. I'd just consider it to be lagging the gold chart. But for now, I'm just going to leave it alone. The Toronto Stock Exchange, or the TSX, I would advance the stop on this particular chart to 1 cent above today's high. On the logic here, even though it could be argued we still haven't closed below this low point here and this little support that we've had here, so you'd be thinking to short there. These guys tend to rally a bit or have a lot more strength if the metals continue to move higher. So don't get overly bearish here. You may see this guy actually just move sideways for a bit. I mean, I wouldn't bet on that, of course, but I would not be, kicking myself if I got stopped out of my short position on this one. That doesn't really bother me here. So this is just something you can think about, keep an eye on, and remember that it is tied to the metals. The VIX, the volatility index, which runs the inverse of the S&P 500. We told you about this one about a week ago. Told you could be going long here at any opportunity that you had, as long as we actually had to stop at that time way down here off of this low point. And at that point, you were trading within this range here, so there was not a lot of risk. She's now made a nice move to the upside. The target was here. You should be advancing the stop now, at least to 1 cent below today's low. And I don't see any reason here for this to stop at this particular point. I can see her continue to move higher, and that means I can continue to see the U.S. markets continue to move lower, which we, of course, covered in great detail in yesterday's video. So check that out. If you've not been to our free website at perfectstockalert.com, it is right there. It's 100% free, and all we ask in return, please refer a friend. Also, I want to thank you guys for all of last month. We had like, I don't know, 10,000 or some odd people visit the website. That was pretty cool. And that's only there because you guys have been referring your friends and sharing our videos online. So I'd like to take a moment and ask you guys, if you don't mind, please don't like this video on today's video unless you're going to share our video online. So if you're going to share this video online with somebody, go ahead and give us a thumbs up on this video. Otherwise, please do not do that. I'd like to just kind of see how many people are out there sharing our videos. So thank you very much for that. God bless. Take care. Enjoy your weekend, and please, by all means, be safe. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.